I'm Nikki Pitts, and here are your market projections for 2022. Okay, so let's talk home prices and supply. Last year was great for selling a home. If you were trying to buy one, a little bit more challenging. Single family homes continue to be in great demand while the housing supply is now at its lowest since the 1970s, which means it's going to continue to be a seller's market, and that multiple offer scenarios are here to stay, at least for now. Due to new housing construction and the end of forbearances causing some struggling homeowners to have to sell, the gap between supply and demand may become a little more balanced this year, easing that multiple offer scenario just a bit. Home prices will continue to rise, but at a much more gentle pace. The expectation is about 7.6% growth this year, which is still considerably higher than the average pace of 5 to 6% in years leading up to 2020, but it's a large deceleration from what we saw last year. Now let's talk mortgage rates. While we saw last year record lows at about 2.2%, last week the average 30-year fixed mortgage rate jumped from 3.22% to 3.45%. That is the highest point that it's been in almost 2 years. The truth is that experts have been calling for rates to rise in their 2022 projections for months. So this is not that big of a surprise, but the forecast is now a reality. And the projections from Freddie Mac for this year are expected to continue climbing throughout the year, with the fourth quarter rate at about 3.7%. Okay, so what does all of that mean for you? As home values and monthly mortgage rates continue to climb, it's going to impact your overall affordability. Let's say your current income qualifies you to purchase a $350,000 home with a mortgage rate at 3.4% and monthly mortgage payment of $1,550. But you decide to put it off and wait till the end of the year to purchase the same or very similar home in the same neighborhood. Due to increasing home values, that home is now worth $375,000. And with the increased mortgage rate, your monthly payment now calculates at over $1,700. If your income hasn't changed, you may not qualify for the increased mortgage payment. But let's just say that it was a great year at work, you got that well-deserved raise, and you do in fact qualify for the larger loan. In that case, your situation would look something like this. With an appreciated home value or home purchase value and increased mortgage rate, you'll pay about $200 more per month. And rather than you gaining that additional $24,000 in equity on the home, you've now paid that to the seller because the same home is now worth $374,000. By purchasing sooner, you would have saved about $200 a month and gained $24,000 in equity. So should you wait or buy now? Well, if you're waiting in hopes of falling prices, you should know that prices are unlikely to drop drastically anytime soon. They're going to continue to appreciate, which means you could be paying substantially more for the same property later on. Secondly, mortgage rates are on the rise. If waiting till later is just best for your overall circumstances, just understand that you'll pay more to borrow your money, and your monthly mortgage will be higher as well. So the bottom line, guys, is that you should buy when the time is right for you. If you're qualified financially and you've been thinking about buying a home, the points that I highlighted should be an incentive to act sooner rather than later. So consider making 2022 your year to purchase. I'm Nikki Pitts, and as always, I'm here and happy to help.